Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some stocks on the move today in Europe. I'm Stephen Carroll with Lizzie Burden, and we're joined by Bloomberg reporter Chloe Mele. Chloe, good morning.
Good morning.
Let's start with Volkswagen announcing a beat on cash flow and rebounding from the tariff uncertainty.
Yeah, well, it's not often that I come on here and say that it's a good day for car makers, but today it definitely is. And Volkswagen
has to happen once in a while, right?
Yeah, it can happen. And Volkswagen in particular, as you mentioned, is doing well this morning. And as you mentioned, there is a couple of reasons behind that. So first of all, it did say last night that it ended 2025 with more cash in its automotive division than it had expected. And that is because it's essentially saving a lot of money by delaying projects and investments in electric vehicles. So it's pushing back payments to suppliers and spending less on things like equipment, tools, research. And so this lower capital spending, it's better liquidity, reassured investors. And then the other thing, the bigger picture is, of course, Trump, and Trump saying that he wouldn't impose tariffs on the countries that have said they were against his efforts to acquire Greenland. So when he announced those tariffs and said that they would be imposed on February 1st, the car making sector took a really big hit because of how exposed of an industry it is to global trade and to tariffs. And so this reversal from Trump is seen as very positive for the sector. And there's not many details, but as Lizzie mentioned, it's enough for markets. And so we have now essentially proof that one of the biggest car makers is finding steadier footing. And then there's also now this tariff threat being walked back. And so both of those things have been very positive. And we've seen all of those car makers in the green actually this morning, and Volkswagen really leading that charge as well.
Now, Chloe, you know I like a discount. B&M down today 1.1% because of a cut to its earnings outlook. Tell us more. Yeah, so it cut its guidance again, and so this time it's because of the costs of its turnaround plan. So just to rewind a bit, it essentially warned on profit back in October, said that a review of the business had revealed some really big missteps, like duplicated promotions and too many product ranges, and it announced a plan to bring the company back to growth. And then 2 weeks later, so still in October, it said that it had made an accounting error, and so it cut its guidance again, and then the CFO left as well. And so all of that led to a lot of weakness in the share price back in 2025. And today, it's saying that the turnaround plan that it announced last year is showing some very early signs of progress, but that all the measures that it's taking, like clearing inventory and reducing pricing, for example, that's going to really hurt profit in the near terms. And so that's why it cut its target again. And that's, of course, not being taken super well by the market. And it will probably take a while for B&M to be kind of properly back on track, because it's dealing with a lot of competition and also those increasing wage costs, which are really weighing on retailers more generally.
And then we're turning now to France and Ubisoft, the games maker, cutting its guidance and cancelling a number of new projects.
Yeah, and that's really tough day today for Ubisoft. It saw the steepest ever drop in the shares, talking about 30%. And that's because of that guidance cut and this announcement of a big restructuring. So it's trying to streamline the business. And so it said it will be closing studios in Canada and Sweden, and also cancel 6 games and delay 7 other games. So one analyst said that this decision on the games shows that the internal operating model is broken and that management doesn't have a grasp on the development cycle. And Ubisoft has really struggled to remain competitive in the last few years, and the games that it has put out haven't really resonated with audiences the way that they needed to. And the company is now hoping that this major restructuring means that it can go back to growth in a couple of years. But in the meantime, this guidance cut and these delays on games means that there's probably going to be a lot of short-term pain.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.